Hi Prof and fellow friends. We are from Group Southern Batch 5 going to present about the ethical issues in forensic accounting. So myself is Vishant and my group members are Santhi Dewey, Raina and Wang Yho. Cosmo Technology Industrial Berhad is an investment holding company. Nature of the business is investment holding. The company produces a wide variety of motor vehicle parts and accessories, as well as mobile phones through its subsidiaries. Currently, Cosmo Mobile focuses on communications technology as it aims to become the best mobile phone manufacturer in the region by 2010, providing a wide range of services including design, sourcing, new product launch, supply chain management, regional manufacturing, and excellent after-sales support. Cosmo Technology Industrial BHD has, however, committed fraud with intent to deceive, furnishing Bursa Malaysia Berhad with a false declaration. Nur Hamza was the group managing director at the material level, while Mohammed Azam was executive director of Cosmo Technology Industrial Berhad Cosmotech. Cosmotech failed to ensure the company's announcement dated February 29, 2008 fourth quarterly report for the financial year ended December 31, 2007, QR April 2007, took into account the adjustments as stated in the company's announcement dated June 30, 2008, in particular the adjustments pertaining to additional provision for doubtful debts and impairment loss for development cost. Company declared profit of Rs 109,000 in QR April 2007. However, Cosmo reported loss after taxation and minority interest of Rs 141 million in annual report 2007. The difference of Rs 141.824 million between the unaudited and audited results for the financial year ended December 31, 2007 represents a deviation of more than 100 times. In this case, assumptions that can be made are financial statement assertions or statements or claims made by businesses about the fundamental accuracy of the information contained in their financial statements. Financial accounting's role is not to show a company's value, but rather to provide enough information for others outside the company to determine the company's value for themselves. Financial statements are annual reports that summarize a company's activity over the previous year. They include the profit and loss statement, balance sheet, statement of total recognized gains and losses, and, if necessary, the cash flow statement and supporting notes. A company's success is dependent on accurate financial statements. A company's demise can be precipitated by poor financial management. Income statements, also known as profit and loss statements or P&LS, are a basic accounting of a company's profits, expenses, and sales. These reports will provide insight into a company's finances in the near and distant future. Any company is doomed to failure unless its financial statements are accurate and its owners and managers understand them correctly. A company could track its previous growth and then estimate its potential future growth. A company's liabilities include any debts, claims, obligations, or potential losses. An account payable is an example of a liability. Accounts payable are simply sums of money that a business owes but has yet to pay. This could be tracked to help reduce future expenses that have turned out to be more expensive than they should have been. Second, top management is in charge of the company's accounting. The financial statements are the responsibility of management. The auditor's role is to provide an opinion on the financial statements. Management is responsible for establishing and maintaining internal control that, among other things, initiates, records, processes, and reports transactions, as well as events and conditions, that are consistent with management's assertions embodied in the financial statements. The auditor's knowledge of these issues and internal controls is limited to what he or she learned during the audit. Thus, within a company, the prevention and detection of fraud is primarily the responsibility of management, who are overseen by those charged with governance. Auditors, along with other members of top management and financial statement reporting, play an important role. Furthermore, auditors are responsible for providing shareholders with reasonable assurance that the financial statements are free of material misstatement, whether caused by fraud or error. However, public opinion in many places suggests that auditors are expected to play a role that goes beyond providing this reasonable assurance. In Cosmo's case, in year 2006 and 2007, Dr. Nick Abdul Rashid, who held the position as company's chairman and chairman for Audit Committee. With the same person holding these two important roles, it rises to the risk of self-review and may impair the objectivity of the chairman and the board when deliberating on the observations and recommendations put forth by the board committees. The check and balances will not in place with the chairman holding the chairman position as well in Audit Committee. On April 28, 2021, Securities Commission Malaysia has released an updated version of Malaysia Code on Corporate Governance stated that the chairman of the board of directors of a Malaysia public listed company, PLC, should not be a member of its audit committee, nomination committee, or remuneration committee. Securities Commission Malaysia has noticed this and make a correction on this non-good practices. The adverse impacts of corporate fraud are more severe at the entity level, particularly in terms of damaged firm performance, loss of image and reputation, loss of access to important resources, loss of net income leading to a reduction in shareholders' equity, lowered credit rating, as well as imminent collapse and/or bankruptcy. In Cosmo Technology SDN case, the revenue figures, which ranged from RM7 million to RM40 million, were found by the Sessions Court to be false, as they contained fictitious sales. Vignesh Kumar noted that when the SC investigating officer was cross-examined, he admitted that their focus was on the financial records and not the computing system. The company's accounting system is fully computerized, and no one was called by the prosecution to testify as to who had inputted the data. Witnesses told the Sessions Court that they did not know who had inputted the data in the system. Vignesh Kumar said his clients cannot be faulted for the apparent false information by being directors of the company, considering they did not know where the false information came from. The prosecution's failure to verify that the computerized accounting system was in proper working condition, and to produce a certificate verifying the system was in order, created doubts on the prosecution case. The counsel also said the testimony by the company's chief financial officer, CFO, should not have been accepted by the court, as he was an interested party and wanted to shift the blame to the two former directors. All of this causes Cosmo Technology SDN BHD to lose image and reputation. As a matter of fact, we generally have a discernment that all the data in a yearly report is right with no disparities, all yearly report are right. In any case, discernment changed and we comprehend there is additionally no assurance that every one of the yearly reports distributed are 100% valid, fake annual report. It was reported that Noor Hamza and Mohammed Azam were each sentenced to pay a fine of RM 1.45 million and serve a 2-year jail term for furnishing false statements in relation to Cosmo's revenue figures in its unaudited quarterly reports for 2006 and 2007. Lim, meanwhile, was fined RM 560,000 and ordered to serve a 1-year jail term for abetting the two men in committing the offenses. All three were initially acquitted by the Sessions Court, but upon appeal by the Securities Commission Malaysia, SC, the High Court ordered them to enter into their defense and they were subsequently convicted by the Sessions Court in May last year. They were charged in 2011 with 8 counts of furnishing false statements to Bursa in relation to Cosmo's revenue figures in its unaudited quarterly reports for 2006 and 2007. From the incident of Cosmo Technology Industrial Berhad, the former managing director, Datuk Noor Hamza Nordin and former executive director, Mr. Mohammed Azam Mohammed Noor have paid a painful experience due to the fraudulent of false statement in annual report of 2006 and 2007. Both of them were found guilty and punished with RM 1.45 million and served 2 years jail term. While the account manager, Halen Lim Hai Loon, need to pay fine of RM 560,000 and serve 1-year jail term. First learning, enhanced internal control and financial policy. The validation process of financial figure to be published need to be enhanced to ensure check and balance and no oversighted mistake or potential fraudulent will be happened. In Cosmo's case, the company has furnished false statement to Bursa on its revenue figure in its unaudited quarterly report for 2006 and 2007. It's not a short period but total 8 quarters for 2 years. Why company's chief financial officer, CFO, and audit committee didn't notice and escalated for further action. In this case, we assumed both CFO and audit committee were innocent or not involved in fraudulent as they were not charged under the court. It may due to the CFO and audit committee or act like a rubber stamp and they have no role in the validation process. This is wrong. The CFO and Audit Committee must be part of the financial figure validation process and not only rely on Managing Director and Executive Director. The majority of accounting scandals during the last 2 decades have included false financial reporting. False financial reporting is the misrepresentation of a company's financial statements by its management. Typically, this is done with the intention of deceiving investors and sustaining the share price of the firm. Short-term impacts of deceptive financial reporting may increase the stock price of a firm, but long-term repercussions are virtually always negative. This short-term financial orientation is frequently referred to as myopic management. Lack of morality in accounting would provide preconditions for legal fraud that are not necessarily connected to originality, but rather to the inadequacy of an accounting system devoid of norms and ethical principles, hence diminishing the quality of accounting reports. An ethical code is essential for a business. Without it, workers lack a standardized framework for understanding values which are not always crystal obvious. The company should have a standardized ethical code and not left ethical judgments to the discretion of its employees. An employee who adheres to an industry's code of conduct is seen as an asset by the organization. Reaching the industry's overall business objectives is facilitated by adhering to the bank's code of ethics. In all instances, according to deontological theory, ethical conduct must adhere to a predetermined set of norms or principles. Even if the actual effect of adhering to established moral norms differs, the result doesn't really define whether an action is ethical. For instance, according to deontological philosophy, it is always immoral to lie, even if telling the truth might avert a negative result, such as death. False financial reporting is not always the consequence of a large scheme or conspiracy. Management in review may justify a major misrepresentation as a strong rather than incorrect interpretation of complicated accounting standards or as a temporary misrepresentation of financial information, including interim statements, intended to be remedied when operational performance improves. An accountant should discuss these topics with the boss and explain why he cannot defer the transaction to the next fiscal year. When explaining why he cannot generate the report as requested, he might phrase your explanation in terms of the danger to the firm. This will aid the management in comprehending the risk posed by the inaccurate reporting. There may be company-wide policies or rules governing the creation of reports that might support your assertions. Equally, he should emphasize that, as an integrity personnel, he is governed by the ethical code, which bans making false or deceptive comments. Integrity implies that a company's accounting processes comply with a consistent set of accounting rules, such as GAAP or IFRS. When everyone adheres to the same accounting rules, stakeholders are more confident in the veracity of financial figures. Companies with high ethical identity retain a greater level of stakeholder satisfaction, which has a favorable effect on their financial success. Customers, workers, vendors and suppliers, and investors are stakeholders. In contrast, a lack of professional and personal ethics may result in adverse financial outcomes. Numerous banks and insurance companies are in a dangerous situation due to risky lending and dubious business practices. The economic success of a business may be enhanced by ensuring ethical conduct.